This Twitter user has been predicting that the price of Bitcoin will fall to around $12,000 for some time now. He first made this prediction when Bitcoin was trading at $16,000, and today it's trading at $28,500. Recently, he made a new prediction, saying that Bitcoin will experience a capitulation and drop down to $12,000. However, it's important to note that this user is essentially a gambler, and his predictions are based on his own analysis, without any concrete data or deeper understanding. Despite this, his followers tend to increase when his predictions come true, giving him a kind of celebrity status in the world of Bitcoin trading. However, this kind of celebrity status can actually lead to cognitive biases that can affect the accuracy of his predictions. One of the cognitive biases that may be at play here is confirmation bias. This is when someone looks for information that confirms their existing beliefs, while ignoring information that contradicts those beliefs. For example, our Twitter user might focus on data that supports his prediction that Bitcoin will fall to $12,000, while ignoring information that suggests it might rise instead. Another cognitive bias is the sunk cost fallacy. This is when someone continues to invest in something, even when the evidence suggests it's not working out. For example, our Twitter user might continue to predict that Bitcoin will fall to $12,000, even when the evidence suggests that he's wrong, simply because he's invested so much time and energy into this prediction and reputation. Finally, there's the availability heuristic. This is when someone overestimates the likelihood of an event based on how easily they can recall similar events. For example, our Twitter user might believe that Bitcoin will fall to $12,000 because he can easily recall other times when it's fallen to similar levels in the past, even if those events were caused by different circumstances. It's important to remember that financial predictions, especially those made by individuals who aren't experts in the field, can be affected by a number of cognitive biases. By understanding these biases, we can be more critical of the predictions we hear and make more informed decisions when it comes to investing our money.